Imagine this. You're 15 years into the game, not just surviving, but winning. No insider info, no magic indicators, just one mindset, and it changes everything. This isn't a story about luck. It's about Mark Ellis, a trader who's been profitable for 15 years through bull markets, bear markets, crashes, rallies, you name it. While most traders are out there trying to predict the next move, Mark made a radical shift. He stopped guessing altogether. What if I told you that the market doesn't reward predictions? It rewards presence. That the secret isn't in trying to outsmart the market, but in learning how to listen to it. That's the journey you're about to take. In this video, we're going to step inside the mindset of a trader who sees the market like a living auction, where every price move is a message and every rejection is a signal. And by the end, you'll understand why letting go of the need to be right might just be the most profitable decision you ever make. So take a deep breath, leave your opinions at the door, and get ready to see trading through the eyes of someone who finally stopped guessing and started winning. Let's flip the script on everything you've ever been told about trading. Most traders believe the market is chaotic, a random swirl of candles, indicators, and breaking news. So they chase signals, forecast outcomes, and try to outsmart what feels like a rigged game. And then, like clockwork, they lose. Not because they're stupid, but because they're asking the wrong question. See, Mark Ellis doesn't trade like that. Not anymore. 15 years ago, Mark made a shift, a subtle one. But it changed everything. He stopped trying to predict where the market would go next, and instead asked, what is the market doing right now? That one question, that mindset, is the core of everything we're about to explore. To Mark, the market isn't a mystery. It's not chaos. It's a giant auction. Imagine a bustling marketplace, like something out of a movie. Vendors calling out prices, shoppers bargaining, crowds forming where prices feel fair, and scattering when prices feel wrong. That's the market. Every single candle you see is not just price, it's negotiation. It's buyers and sellers testing each other, finding agreement, rejecting imbalance, searching always for value. Mark calls it the auction mindset. And once you start thinking this way, you can't unsee it. Because behind every spike, every dip, every fake out, there's one thing happening: price discovery. It's not about predicting where the market should go. It's about understanding where the market is trying to find balance and where it's clearly failing. That's what gives Mark his edge. He doesn't need a forecast. He just needs to read the conversation happening in real time. When the market rallies hard into a price zone and then volume disappears, that's not momentum. That's exhaustion. The crowd is thin. The price is being rejected. To Mark, that's an opportunity. Or when price drops aggressively and then suddenly reverses with high volume stepping in, he doesn't see it as volatility. He sees it as the auction rejecting lower prices. Again, opportunity. You don't have to know the future to make money in the present. You just have to know what the market is doing, not what you hope it's doing. And that's what separates pros like Mark from the masses. While most traders look at the market like a casino, hoping for luck, Mark sees it like an auction floor. Loud, messy, emotional, but ultimately logical. Let's break that image down for a second. Picture a crowded auction room. People shouting bids, prices rising, tension building. Suddenly, a bidder calls out a number far above the current price. The room goes quiet, no one follows, there's hesitation, then the price falls back to where it was. That moment, that rejection, is everything. It tells you where the market's limit is. And that's where Mark operates. Not in the noise, but at the edges, where price stretches beyond what the market can accept and then snaps back into balance. He's not chasing breakouts. He's not praying for trends. He's reading the behavior, watching how the auction unfolds, and stepping in only when he sees something the crowd doesn't. A moment of imbalance, a moment of exhaustion, a moment where the market shows its hand. Because here's the truth: the market is always talking. Most traders just don't know how to listen. They want signals. They want certainty. But the auction mindset doesn't give you certainty. It gives you context. And in trading, context is everything. Mark's biggest wins didn't come from predictions. They came from recognizing how the market negotiates value and being ready when that negotiation breaks down. And when it does, that's when you move, not before. Think about that next time you're tempted to click buy just because the RSI is low or the MACD crossed. Ask instead, is this move being accepted by the market or is it being rejected? That shift in thinking is subtle, but it will change the way you trade forever. So, what is the auction mindset really? It's not a strategy, it's a worldview. It's a commitment to humility, to observation, to patience. It's the decision to stop fighting the market and start listening to it. It's understanding that price isn't just a number, it's a conversation. And every move has a speaker, either buyers or sellers trying to make a point. Your job is to listen and respond when the message is clear. Mark Ellis isn't a fortune teller, he doesn't trade like one. He's an interpreter, a listener, a participant in the auction, not a gambler on the sidelines. And that's what we're going to learn in this video series. Because when you stop guessing, when you stop needing to be right, when you start paying attention to what the market is doing right now, that's when you start trading like a pro. Welcome to the auction. If there's one habit that destroys more trading accounts than anything else, it's forecasting. Trying to predict where price will go, convincing yourself that you know what's going to happen next. Trading not from evidence, but from ego. Mark Ellis knows this firsthand. In the early years of his career, Mark was like most traders, obsessed with calling tops and bottoms, always searching for that perfect setup that would give him certainty. He'd look at news, indicators, analyst reports, and build a narrative. And once that narrative formed, it became dangerous because he no longer saw what was happening in the market, he only saw what he wanted to happen. And when the market didn't agree, he'd freeze, hold losing positions, double down, refuse to accept what the price was clearly showing. That's the silent killer of forecasting. It doesn't just ruin trades, it hijacks your mind. When you forecast, you don't just place a trade, you tie your identity to an outcome. If I'm right, I'm smart. If I'm wrong, I've failed. That kind of thinking is a fast track to tilt, and Mark paid the price more than once. There was one trade, and he'll never forget it, where he was certain the euro would rally after a major data release. He bought in early. The market moved slightly in his favor, just enough to feel good. Then it reversed, hard. Did he cut the trade? No, he doubled down. It's just a pullback, he told himself. Minutes later, it kept falling. Now in the red, he added again. This has to turn around. By the end of the session, he was emotionally wrecked. The loss wiped out 2 weeks of solid performance. And for what? Because he needed to be right. That night, he opened his journal and wrote just one sentence. What if I never predicted again? That sentence changed his trading forever. From that day forward, Mark committed to trading only what was happening, not what he thought should happen. No forecasts, no biases, no narratives, just the truth of the current price action. He started asking different questions. Where is value being established right now? Is price being accepted or rejected at this level? What is the market actually doing, not what I want it to do? That simple mindset shift did two things. First, it lowered his stress immensely. He no longer felt the pressure to be right. He was just reading the tape. Second, and more importantly, it improved his results drastically. Because when you trade what is, you're no longer fighting the market. You're flowing with it. You're not trying to guess the next candle. You're responding to structure, behavior, context. This is where most traders struggle. They're addicted to the illusion of control. They want to feel like they know. But the market isn't something to control. It's something to read. And that's why Mark trades with an interpreter's mindset, not a prophet's. Think about it like this. Imagine you're driving a car. The road ahead is clear, but instead of looking at the windshield, you're staring at the weather forecast for next Tuesday. Sounds crazy, right? That's exactly what most traders do. They ignore what's unfolding in front of them because they're too focused on what might happen later. And in the process, they miss the truck that's braking hard right in front of them. Mark doesn't drive like that anymore. He looks out the windshield. He watches how the market is reacting right now. And when he sees price reach a known area of value and volume dries up or order flow shifts or price gets rejected, that's not a prediction. That's a reaction. He's not saying, it should go down here. He's saying the market just told me it doesn't want to go higher. That's a difference. And it's why he rarely gets caught on the wrong side of big moves anymore. There's another thing here, and it's subtle but important. When you forecast, you limit yourself to one outcome. You anchor yourself. This must break out. This has to reverse. It can't go any lower. Now you're blind to all other possibilities. But when you trade the present, you open yourself up to multiple paths. You're not forcing anything. You're reacting to what's real. That's freedom. It's also how you build longevity in this game. Most traders burn out because they're constantly wrestling the market, trying to bend it to their will. Mark, he's dancing with it. He knows the market owes him nothing, so he never expects anything. He just listens, and when the market says something clearly, he acts. If it's balanced, he waits. If it rejects price, he fades it. If it breaks value with acceptance, he follows. Simple, elegant, no ego. So if you're watching this and you've been forecasting your way into losing streaks, step back. Ask yourself the same question Mark asked. What if I stop predicting? What if you let the market tell you what to do? Because the truth is, you don't have to be right to be profitable. You just have to be aligned with reality. And the more present you are, the more you'll see. That's where real trading begins. Let's get one thing clear. Mindset is critical, but without the right tools to read the market, mindset alone won't save you. Mark Ellis doesn't just feel the market, he decodes it using three powerful tools that most retail traders either ignore or misunderstand. They are auction market theory, market profile, and volume profile. Let's break each one down, not in textbook terms, but in real world language, the way Mark actually uses them. First up, auction market theory. This is the foundation of how Mark sees the market. It's the idea that the market isn't random. It's a continuous negotiation between buyers and sellers. Just like an auction. Imagine you're at a local antique auction. The auctioneer starts the bidding, people raise their hands, prices go up. At a certain point, the bids slow down. Nobody wants to pay more. That's the limit. That's where the market says, enough. Now reverse it. Price drops. Fewer sellers want to let go of their item, bids pick up again, and a new fair value forms. That's exactly what the market does. Every day, every session. It's not chaotic, it's responsive. The market is constantly searching for balance, for the price where both sides agree. That price becomes the center of gravity. And when price stretches too far from it, it either accepts the new level or it rejects it and snaps back. That's the game. Mark doesn't guess direction. He watches the auction unfold and then decides whether to join, step aside, or take the other side. But to do that, he needs a map. That's where market profile comes in. Market profile, the map of value. Most traders are staring at candlesticks. Mark's watching time and structure. Market profile is a tool that shows where price has spent time, where the market has rotated, accepted, and found agreement. It creates a vertical histogram that forms shapes, bell curves, P shapes, B shapes that tell a story. For example, a balanced day looks like a clean bell curve. Price oscillated around a central point. Buyers and sellers were in harmony. A P shape tells you short sellers are getting squeezed. Price rallied fast and then stabilized at higher levels. A B shape suggests long liquidation. Price dropped, rebounded weakly, then settled. Mark uses these shapes to understand what phase the market is in and what kind of opportunities exist. Let's say price has been bouncing inside a value area all morning and then suddenly pokes above it. If volume is strong and time is building at those new highs, the market is accepting the higher prices. Mark might go with it. But if price pokes and retreats quickly with low volume and no follow through, he sees a failed auction and he fades it. That's the power of market profile. It gives structure to what otherwise looks like noise. But there's one more piece, and it's the one most traders miss: volume profile. Volume profile, where the heavy money lives. While market profile tells you where price spent time, volume profile shows you where the big money made its moves. Think of volume profile as the X-ray that reveals where real commitment has happened. It's a horizontal histogram that stacks total volume traded at each price level, and it gives Mark the ability to spot two critical zones: high volume nodes, HVNs, where lots of business was done. These are magnets. Price tends to return to them because they represent fair value. Low volume areas, LVAs, where very little business happened. Price moves quickly through these zones because there's no resistance, no interest. Here's how Mark uses this. Let's say price is sitting just above a high volume node. Mark knows this area is sticky. Price might chop or reverse here because it's comfortable. Both buyers and sellers agree it's fair. But if price enters a low volume pocket, that's a red flag or a green light, depending on the context. Low volume zones are like ice patches, no grip. Price can accelerate rapidly through them. Mark often waits for price to break into one of these gaps and then either ride the momentum or, if he sees exhaustion, fade the move and catch the reversal back to value. Putting it all together, these tools don't work in isolation. Mark combines them to read the full picture. Auction theory tells him how the market behaves. Market profile shows where balance and imbalance are forming. Volume profile reveals the pressure points, where money has already committed and where liquidity is lacking. Together, they form a real-time map of the market's mind. And here's the best part. None of it is predictive. It's all reactive, contextual, and grounded in what's actually happening right now. No guesswork, no forecasting, just reading. This is how Mark stays ahead. While other traders chase breakouts based on indicators, he's watching how the auction responds to those breakouts. Are they accepted or are they rejected? Is there volume support or is it fading on fumes? Is price building time at the new level or snapping back like a rubber band? That's the edge. And these tools, they're how he sees it. You don't need to trade faster. You need to trade smarter. And when you use auction theory, market profile, and volume profile the way Mark does, you start to see the market with clarity. You stop reacting emotionally and start responding logically. You stop hoping and start understanding. You stop predicting and start reading. Because when you learn to read the auction, you don't need to guess what comes next. You'll already see it coming. Let me tell you where the money really lives in trading. It's not in the middle of the chart. It's not where everyone feels safe. It's not where indicators flash buy in big bold letters. It's at the edges of value, the outer limits of balance, the psychological tipping points where the market asks, will anyone pay more? Will anyone accept less? And most importantly, what happens when the answer is no? Mark Ellis has built much of his trading success around a simple yet deeply powerful principle: fade the edge. What does that mean? Let's break it down. When price moves away from a value area, whether it pushes above the value area high or below the value area low, it's doing what auction theory calls a probe. The market is testing. It's asking the crowd, are you willing to do business up here or down here? And here's the key. Most traders mistake a probe for a breakout. They see price jump above resistance or drop below support, and they chase it. They jump in thinking they've caught the move early, but what they've actually caught is a trap. Because if that probe isn't accepted, if there's no volume, no time build, no follow through, it often reverses fast. And when it does, that's when Mark strikes. He fades the edge. He takes the other side of the trap, not recklessly, but with precision. He waits for the market to show its hand, a rejection, and then he steps in. Imagine it like this. You're in an auction hall. Bids are flying. The crowd is buzzing. Then someone yells a number way above the rest. Everyone goes quiet. No one raises a hand. The room shifts. The energy fades. That high price? Rejected. Now imagine being the person who quietly sells right into that moment at the highest price of the session and watches as the crowd pulls back and price slides all the way down. That's fading the edge. Mark does this over and over, not because he's trying to outsmart the market, but because he understands the language of rejection. When price pokes above value and stalls, when volume dries up, when order flow hesitates, when the market whispers, this is too far, that's his trigger. Here's the beauty. Fading offers some of the best risk to reward setups in trading. Why? Because your stop is clear. It goes just beyond the extreme. And your target? Often the entire width of the value area. Think about that. You're risking a few ticks to potentially ride a move all the way across the structure. That's asymmetry. That's edge. But here's the mistake most traders make. They fade without confirmation. They assume every move beyond value is fake, and they short it blindly. That's not trading. That's guessing. Mark waits. He observes. He doesn't act on the first poke. He watches the reaction. If price re-enters the value area with conviction, that's his signal. If order flow flips, he's in. If volume collapses at the highs or lows, he's alert. He's not early. He's right on time. One of his favorite setups is what he calls a failed auction fade. Here's how it works. The market opens inside value. spends time rotating, building balance. Then, around mid-session, it pushes above the value area high. Traders chase it. Price floats higher, but with no conviction. Then, suddenly, price drops back inside value. The breakout buyers are trapped. Mark sells short just inside the failed high. His stop, a handful of ticks above. His target, the opposite side of value. And more often than not, it works. Not because it's magic, but because it's probability, structure, and timing aligned. Let me make this brutally clear. Fading is not being contrarian for the sake of it. It's not betting against the trend randomly. It's reading the market's body language and stepping in when it says no more. Rejections tell a story. They reveal the market's true limits. They expose where the crowd got overconfident, and they create powerful opportunities for traders who know how to recognize them. That's what Mark does. He doesn't fight the market. He listens. He waits for the market to extend too far and then collapse under its own weight. Here's a question to ask yourself right now. How many times have you bought the top of a move only to watch it reverse the second you got in? Be honest. We've all done it. It hurts. Not just your account, but your confidence. Now imagine flipping that moment. Imagine being the one who sold that top, who saw the exhaustion, who recognized the trap. That's fading the edge. It's not flashy. It's not aggressive. It's patient, tactical, surgical. It's the kind of trading that doesn't just protect capital, it builds it. So next time you see price pushing to new highs or crashing to new lows, don't rush in. Ask yourself, is this an acceptance or a rejection? Is this real strength or just a probe? Am I chasing or am I positioned where others are about to get trapped? Because the truth is, the best trades are often on the other side of pain, where the crowd gets in too late, where emotion overrides logic, where price snaps back hard and fast. That's where Mark lives, at the edge, where the market tests its limits and shows you exactly where it stops. Fade that, profit from that, own that. That's how you trade the auction, like a pro. Let me tell you something that took Mark Ellis years and a lot of pain to truly understand. A great setup is worthless without the right context. That's right, the same entry, the same pattern, the same candle formation. It can be pure gold on Monday and absolute trash on Tuesday. Why? Because the market is alive. It changes, it breathes, and every session carries its own unique context. Mark used to think trading was all about finding the setup. He had his favorites, the fade at the edge, the rejection wick, the low volume node snap. He thought if he just mastered those, he'd win, consistently. And for a while, it worked, until it didn't. There was a week he'll never forget. 5 trades, same setup, all of them failed, hard. But it wasn't the setup that was broken. It was him, forcing it into a market that didn't support it, because context had changed, and he hadn't noticed. That's when Mark learned one of the most painful and most profitable lessons in his career. It's not about the setup, it's about when the setup matters. Let me explain. Every day, the market opens and begins a new auction. Some days are balanced. Price rotates within a tight range, forming structure. Other days are trending. Imbalance drives the market in one direction with force. Some are neutral, faking both sides before settling. Others are news-driven, unpredictable, volatile, fast. If you're fading the edge on a balanced day, that's smart. If you're doing it on a trend day, you're a speed bump on the highway. Same setup. Totally different outcome. Context is what gives a setup meaning. It's like surfing. The wave, the setup might look perfect, but if you don't read the ocean, the current, the wind, the rhythm, that same wave can crush you. Mark now spends more time reading context than looking for entries. He asks questions before the setup appears. What kind of day is this shaping up to be? Where are we in relation to higher time frame value? Is volume supporting the current move? Has price been accepted or rejected at these levels recently? And based on those answers, he decides whether his playbook even applies. Because here's the truth. Most losing trades aren't bad ideas. They're good ideas in the wrong environment. And that's deadly. Think about it. You see price poke above the value area high. Your instinct says, fade it. But today's auction is different. There's strong imbalance. Volume is rising. Momentum is real. You fade anyway. Why? Because it worked yesterday. But today, it's a freight train. You get run over. Again. Mark used to make that mistake constantly. Now he waits. He analyzes. He lets the market tell him what kind of day it is instead of assuming it. Context tells him when to use a setup and, more importantly, when to stay out. There was one moment during a live session, two charts nearly identical, same structure, same price action, but in one, the market was balanced. In the other, it was breaking out of a long consolidation. In the first, a textbook fade. In the second, fading would be suicide. Same pattern, opposite trades. That's what context does. It separates the pros from the hopeful. It's also the difference between mechanical trading and intelligent trading. Mark isn't rigid. He's adaptive. He doesn't follow the setup, he follows the auction. That's how he survives the chop. That's how he thrives in volatility. That's how he avoids death by 1,000 cuts. And let me tell you something. When you start thinking this way, your win rate changes drastically. You stop overtrading. You stop forcing things. You stop asking the market to cooperate with your plan. Instead, you cooperate with its plan. So here's your challenge. Before every trade, ask yourself, what kind of auction am I in today? Does my setup make sense in this environment? Is the market giving me confirmation or just teasing me? If you can't answer clearly, don't trade. That kind of discipline will save you more money than any entry ever will. And if you're still clinging to the belief that a good setup works in any market, let go. That's fantasy. The pros don't chase setups. They read the auction, they study the context, and they act only when everything aligns. That's why Mark still trades after 15 years, while others burn out in 15 months. So stop being a setup collector. Start being a context reader. Because the market doesn't reward routine, it rewards relevance. And the only way to stay relevant is to respect the conditions you're trading in. Context is king. If you want to know what separates the traders who last from the ones who burn out, it's not intelligence, it's not strategy, it's not even screen time, it's discipline. And even deeper than that, it's ego control. Mark Ellis didn't last 15 years in the markets because he's the smartest guy in the room. He lasted because he learned how to keep his ego in check and his process on track. Let me ask you something. How many times have you broken your rules just because you felt like this one was different? How many times have you revenge traded? How many times have you added to a loser because you couldn't accept being wrong? Be honest, because Mark has done all of it. Early in his journey, he'd sabotage himself in the exact same ways. But it wasn't the market beating him. It was Mark beating Mark. The turning point came after one particularly brutal session. He broke every rule, added to a bad position, chased the next move, got stopped, jumped back in, got stopped again. By the end of the day, he was deep in the red, not because of the strategy, but because of ego-driven decisions. He went home that night and asked himself one question that changed his trading forever. What would it look like if I didn't need to be right? And the answer was simple. He'd follow the plan. He'd let the market lead. He'd let go of control and trade with discipline, not emotion. So he made a vow, no more emotional trades. He created a rule set that was brutally honest. He built a checklist to filter out trades that didn't align. He wrote down his reasons before every entry so he couldn't lie to himself. Most importantly, he began journaling every single day, but not just P&L, not just entries and exits. He tracked his thoughts, his feelings, his behavior under pressure. Over time, patterns emerged. Mark saw that his worst losses always came when he entered early out of fear or held on too long out of pride. And his best trades, they happened when he followed the plan to the letter, even when it felt boring. That was the revelation. Trading isn't about excitement, it's about execution. The traders who survive, they're not adrenaline junkies, they're process-driven. They trade like pilots with checklists, protocols, and no tolerance for guesswork. You don't need to be brilliant, you just need to be boringly consistent. Mark learned to fall in love with boredom, with sitting on his hands, with saying no to marginal setups, with doing nothing when nothing needed to be done. That's the real discipline. Anyone can follow a plan when it's working, but can you follow it after 3 losses in a row? Can you follow it after watching price move without you? Can you follow it when your brain screams, get back in? You're missing it. Discipline isn't a trait, it's a muscle. And like any muscle, it grows through resistance. Mark trained it daily. He used timers to avoid overtrading. He stepped away from the screen during volatile news. He gave himself permission to not trade, even on days when setups didn't show. Because doing nothing is a decision, and often it's the most profitable one. Let me give you a practical example. Mark once went 4 days without placing a single trade. Why? Because the market was imbalanced, no clear structure, volume was erratic, price was whipping both sides. He watched, took notes, walked away, and on the fifth day, conditions aligned perfectly. He saw his setup, the context matched, the auction showed rejection at the edge. He faded the move, managed it precisely, and walked away with one of his cleanest wins of the month. One trade, 4 days of patience, one moment of precision. That's discipline. And that's the mindset that protects you when everything else falls apart. Look, trading is a mental game. The market will test your confidence, your patience, your beliefs. It will tempt you to act out of fear. It will seduce you with hope. It will punish your pride. But if you can trade without ego, if you can show up each day humble, present, and disciplined, you've already won half the battle. Mark Ellis doesn't trade to prove anything. He's not here to beat the market. He's here to read it and respond only when the odds are clear. He wins by not needing to win every time. He survives by refusing to gamble. He grows by following his process, even when it's uncomfortable. So here's the mirror moment. What part of your trading still runs on ego? Where do you justify breaking your own rules? What stories do you tell yourself to avoid facing the truth? Answer that honestly, and you're already on the path to becoming a real trader. Because trading isn't about being right, it's about being real. And real traders, they trade with discipline, they lose with grace, they win with restraint. They don't let their emotions take the wheel. They trade the auction, not their ego. At this point, you've seen the mindset, you've seen the tools, you've seen the discipline. Now the big question, how does it all come together day after day? What does a professional trading day actually look like for someone like Mark Ellis? Is it 12 hours of charts and caffeine? Is it hunting for dozens of setups a day? Is it adrenaline, action, and constant decisions? Not even close. Mark's daily system is simple, structured, deliberate, and most importantly, repeatable. Morning, preparation over prediction. Mark doesn't wake up and rush to his screen. He doesn't scroll Twitter for rumors or slap on 5 indicators. He starts his day with review, not analysis. He looks at where price traded overnight, where value was built in the previous session, what key levels were rejected or accepted, overnight volume behavior. He's not trying to guess what'll happen next. He's trying to understand where we are in the auction. This is where context is built. He identifies value area high VAH and low val, point of control C, any untested single prints or low volume areas, overnight high-low ranges, major higher time frame support resistance zones. Once he has these, he creates a pre-market narrative. Are we opening inside value, above it, below it? Are we likely to stay in balance or attempt a breakout? What kind of day is this shaping up to be? He writes it down. Every day. No exceptions. Opening range. Observation, not action. When the bell rings, Mark doesn't trade. He watches. The first 15 to 30 minutes are for one purpose, reading the auction. He asks, where are buyers and sellers stepping in? Is volume confirming direction? Are we accepting price above, below value? This is where most traders blow up. They try to win the day in the first 10 minutes. Mark waits. If price tests a level and gets rejected, he takes note. If price breaks a level with strength and acceptance, he prepares. But no trades yet. He's letting the market show its hand. Mark trade selection. Only when context aligns. Once the opening range settles and context becomes clear, Mark looks for one thing, alignment. Setup plus context, confirmation, trade. No confirmation, no trade. He's not trying to force the day to give him something. He's watching for these scenarios. Failed auction fade. Price breaks value, gets rejected, returns inside. Fade back to POC. Value acceptance breakout. Price breaks above VAH with volume time build. Enter with the trend. Reversion to value. Price gets too far from POC, stalls, and starts rotating back. Each trade has clear reason for entry, measured risk, often behind structure, defined exit plan, usually near the opposite edge of value or next volume node. No random entries, no feeling, just logic, structure, process. Position management, letting the trade work. Once in a trade, Mark doesn't micromanage. He's not scalping every tick. He's not staring at his P&L. He follows his levels. If price is behaving as expected, he holds. If structure shifts or the auction changes, he exits early. He doesn't need to be right. He needs to be responsive. He journals what's happening, not just for record keeping, but to stay emotionally grounded. His job isn't to win, it's to execute with integrity. Midday. Reset or walk away by midday. Most of the day's major moves have played out. If Mark has taken a solid trade, or if conditions aren't great, he steps away. He doesn't chase, doesn't force one more. If he does stay, it's with a light touch, small size, tighter criteria. His rule, if clarity fades, so does participation. End of day, review, not regret. After the close, Mark doesn't just shut down, he does a full review. What trades did I take? Why? Did I follow my process? Did I break any rules? What did the market teach me today? He screenshots his entries, he notes his emotional state, he reviews his context thesis versus what actually happened. This is how he evolves, one session at a time. The big picture. Mark's system isn't sexy. It's not about scalping every wiggle. It's not about catching tops and bottoms. It's about knowing your levels, trusting your tools, following your rules, letting the market lead. His average day, 1 to 2 trades, max, hours of watching, minutes of action, tons of notes, little noise, little noise. And that's why he's still here, consistent, profitable, grounded. So if you've been jumping from strategy to strategy, chasing the rush, maybe it's time to zoom out. Maybe the real edge isn't in doing more, it's in doing less with more clarity. Because in trading, consistency is king. And consistency comes from one thing, a daily system that never lies. So here we are. After everything you've heard, the mindset, the tools, the setups, the discipline, the system, if there's one truth that ties it all together, it's this. The market doesn't pay for predictions. It pays for presence. It doesn't care how much you think you know. It doesn't reward conviction without evidence. It doesn't owe you a thing. And that's the paradox of trading. The more you try to force the market, the more you try to control it, the more it slips right through your fingers. But when you stop guessing, when you stop needing to be right, when you show up with humility, clarity, and patience, that's when everything changes. That's what Mark Ellis figured out. After 15 years, through wins, losses, broken rules, and rebuilt systems, he learned that real trading isn't about being smarter, it's about being more aligned with the truth in front of you. The truth of price, the truth of volume, the truth of structure, and maybe most importantly, the truth about yourself. Because if you want to survive in this game, if you want to build something real, if you want to stop feeling like you're chasing shadows, then forget the crystal ball, forget the forecasts, forget the fantasy. Start listening, start watching, start responding, because the market speaks every day. And if you learn how to read it without ego, without bias, without fear, you'll find what every trader is really searching for, not just profits, but peace. Thanks for watching.